question. Can you try all together, please? You done? Can I see? All of others, please. You done? And you? Where are the descriptions? Like this, you have to write for all the numbers. Here you don't write BD, you write B balance carried down, CD or CF. No, brought down is here from the previous year. You will carry down to the next year.
Then carry forward.
Yeah, carry forward or carry down, both the same.
Sound like having this, what we have planned for this session.
Yes, okay. Yes, give it. Let's work out together. Income tax payable. When they say the word payable, means liability. So we will open the T account. So activity number,
One.
page number 379. Huh? Tax payable. Now in this question, they have given you 2 years, X8 and X9. So what do you think the current year?
104,000.
X9.
X9.
X9 is the current year, X8 is the last year. So for the current year, tax liability payable opening balance, how much?
160.
160? So, brought forward 160.
So last year's expense for this one 160 recently for statement of profit.
I didn't understand what you meant.
When we closed the last year, 2018,
Yes.
debit it was payable, then we credit expense for this one. Tax payable expense.
No, I think you are a bit confused in this one.
This is what I need to.
No, not like that. Sorry. When you finalize in the last year,
Yeah.
after the P&L charge, whatever the tax expense amount is, we don't know.
No.
And after the tax payment any, the net answer is
That means we have estimated this amount. We didn't exactly it didn't come.
yeah, the tax liability is the calculation arising from the your taxable profit in the P&L,
Yeah.
and you estimate that.
Yeah.
And then also you may make some payments to the tax department. The net answer is this, which at the end of the last year ended up as a liability for you. So current year that becomes the opening balance. That's clear. Now, end of current year, I have a liability of how much?
156.
156. And they also say the tax expense in the statement of profit or loss for the year, to the current year, 2000 X9 is how much?
104.
104. So what is the double entry for that? You need to think the double entry. Where debit and where credit.
Tax payable.
We need to debit
Debit tax expenses account.
tax expense 104 and then credit to
Tax payable.
tax payable 104. So what you do is you credit 104 and then this you are debiting to the profit. Now let's balance this.
This is why I was confused. Brought forward and carry forward. It's very important.
Yeah. So when you can you take the total on the credit side? How much coming here?
200.
2?
200.
74.
272.
Sorry. So the balancing figure
116.
116. What do you think this 116 is?
It's the paid amount.
It's the cash that I am paying to the tax department for the company. So, remember, when you prepare a complete cash flow statement, this answer only, we have to take it to cash flow statement. If you remember in the last class, when I gave you the format, I gave you one line item, tax paid. This amount you have to take it there. Clear? Okay?
This clear, but I have one question. Normally, I'm asking you this question. First, we bought 168.
Correct.
Why included sale?
Liability rule, tax is payable is a liability. Liability is a credit side item.
Credit, huh?
Yes. If it's a asset, then the debit side. And you see here, I have written brought forward credit side. And this is also liability, remember. Then don't come and ask me next class, you told me liability should be credit and then what about this?
Oh.
This again a liability, but what will happen is,
This is where I was confused.
this one will go here for the next year. See, again it's a credit. Clear? So that's what I wanted to clarify. So now for this question, our answer is what? 116 is the answer. Clear? So let's move on to the next question. Can we try activity 2? On 31st December 2018, the value of plant and equipment in the books of E company was as follows. Plant and equipment accumulated depreciation. Plant and equipment net book value. Anyone have doubts in these three line items?
No.
Clear, right? Your cost, your depreciation and net book value. On which date? 31st December 2008. Now what they say? Now we are moving to the next year. So these items, these two items, when you talk about next year, will become an opening balance. Clear? So on 1 January 2009, that's exactly the first day of the next year. Our accounting, and also please be careful with the accounting year. So our accounting year is 31st December. So it's also clear there. So item of plant was sold for 8,000, which had originally cost 20,000. Now, if you think your total collection of the plant is like a pot, what was the total amount inside that pot in dollars? 200,000. And from that pot, I am taking a small portion outside. And the cost of that how much? 20,000. And for how much I am selling this? 8,000. And the net book value was 11. Cost was 20. Net book value 11. So can you tell me how much is the accumulated depreciation related to this particular asset? 9,000. Understood? Both, all of you understood or not?
Again.
So I am selling a piece of asset. The cost of the piece of asset how much?
Cost.
The cost of the piece of asset. How much what is the cost of the asset that I am selling?
200.
Now, 200,000 Habibi, cost of the total asset all I have. But I am not selling everything. I am selling only small piece. How much? Issue in 20,000. Sure?
Okay.
This one, 20,000. And for how much money I am getting? 8,000 I am getting. And up to now, I am using this 20,000 or I am not using this 20,000? Using. And what was the total depreciation so far for the purpose of my usage? Can we calculate or not?
It's 12,000.
Yeah. Depreciation, how you got 12,000? Can you explain me? Accumulated depreciation of the asset that I sold. My cost is how much? 20. Clear no? Then what is, how I arrive the depreciation? What information, have they given you depreciation straightforward? No, right? They have not given you this depreciation. But they gave you this information. What's that?
Net book value.
Do you know the equation for net book value?
Now depreciation 9,000.
Ah. So tell me what is the equation for net book value?
Cost minus net book
No,
value.
no. My question is, what is the equation for this? Net book value is equal to what?
This
Cost minus
cost minus accumulated
depreciation. Cost minus accumulated depreciation is the net book value. They have given you net book value. They have given you the cost. So, are you not in a position to calculate the depreciation? You can. How much is that?
9,000.
Colors, 9,000. Now, anyway, that depreciation information is not necessarily important for us, but still for our knowledge, I told you. Now, can you please tell me what in this particular transaction, I have made a profit or a loss?
Loss.
How much?
3,000.
How you calculate?
11,000 is the net book value. 8,000 is the selling value.
Are you in a position to do this in a T account instead? Can you all of you try please? So activity number
Activity number
page
two.
number 378.
380.
Right? I have disposal account. The cost of the asset I am selling is 20. Accumulated depreciation of the asset I am selling is 9,000. And then cash I am receiving is you are getting a difference. How much? Yeah, we will write PNL and this will go to income statement as loss. Yeah, Bob, you want me to explain you?
I'm asking this 9,000.
Yes.
Because I told this cost
9,000 I found it better like this. 20,000 minus 11,000. 20,000 is the cost. 11,000 is the net book value. You should remember there is an equation which we learned. Net book value is equal to cost minus accumulated depreciation. Cost is, sorry, net book value they have told you 11. Cost they told you 20. And this we don't know. And using this equation we calculate that this is.
So in this formula,
Yeah.
we have to minus the scrap value.
No. Scrap value subtraction is for the purpose of calculating depreciation, not to calculate the net book.
Net book.
There's no requirement to include the scrap value in calculating your net book value. Net book value you have to calculate every year.
Yes.
Scrap value comes at the end of
End
the
of the-
use of the lifetime.
So when we calculate the depreciation only, we need to take it as scrap value.
When you are using the straight line method.
And if it is for revaluation,
10,000 is loss, right?
Pardon?
Loss.
Yeah, this is the loss. Your
so
question?
the revaluation point
Yeah.
of time, that time we have to consider the scrap value.
Exactly. So, let's continue. Still the question is not finished. On 30th of December, the value of the plant and equipment in the statement of financial position was blah blah blah. Show the relevant entries for property, plant and equipment which will appear in the statement of cash flows under the indirect method for e-company. We have done one thing. Now let's open PPE. What was my opening balance?
200.
Now what is the accounting year we are talking about? 31st December 2019. Correct? So what was my opening balance for the property, plant and equipment?
200.
200,000. What was the closing balance?
280,000.
minus 200.
No, cost
280.
280,000. And what was the asset that I disposed? The cost of the asset I disposed was
20,000.
20. So we balance this.
BBE, sorry.
300.
Yeah.
100%.
Jamudin.
BBE, what's meaning?
Property, plant and equipment. So there is a balancing figure here. What do you think this is?
100.
How much?
100.
100,000 exactly?
Yeah, that's
20 and 300. 300
additional purchase.
What is the description we can write?
Additional assets, a cash or bank.
Cash. Here, one small complication, please be careful. In the question, sometimes they may talk about revaluation. If they talk about revaluation, before you balance this, before you finalize this, you should pass the double entry for that particular revaluation also. So, any revaluation details should be taken into consideration.
Where do you get the cash from?
Somebody is paying, see, this cash you are not getting, you are paying. See, you are debiting here and then you have to think where to credit. Where to credit?
Why are you?
Yeah, ask me.
Why are you debiting it? Can't you just leave it and get the balance of 80,000?
No, you didn't understand that.
Here opening balance and closing balance
See,
confused over.
see, here you have an opening balance of how much?
200%.
200,000. And this opening balance has changed to 280. So the value has increased by how much?
80,000.
80,000. But on the other hand, we know that we have sold one asset for 20. So you see, my 200,000, I have disposed of 20. So what is the closing asset value now? 180. But this 180, now how much it became? 280. So some asset value has increased, isn't it? So to value increase, now let's assume it's a yard. You have car. So at the beginning of the year, you have car worth of 180. Now car worth of you have 380. Oh, sorry, 280. So who brought this 100,000 difference? Someone from the sky came down? No. So the business has purchased this. So when the business purchased, you have to pay for that. That's what I am writing here.
Cash credit and then property.
Exactly. You have to credit the cash and debit here. One information that please be careful with this. Any revaluation details be taken into consideration. It
So
will
can we
also.
always say that it's cash?
Pardon?
Whenever we write like this, can we always say that it's cash?
Unless there is a revaluation. What I try to mean by that, you see now value has increased by 100,000 now. Now sometime without purchasing or without increasing the quantity of asset, you say that this table now worth originally worth 15, now you say that market value is 25. So there has been an increase of how much? 10,000. Have you paid by cash? No. But that is a revaluation. So you have to factor first revaluation and the remaining always remember that is cash. So this is one answer. Now we still not finished.
In case,
Yeah.
if they say instead of cash, if they say the assets are purchased a credit,
Yeah, then it's a payable.
Payable and then
Yeah.
it will come here.
Pardon?
Instead of cash, it will be for payable and then it is.
See, then the examiner has to tell you this. In the absence of such a statement in the question, it is always cash. Clear, yes, sir? Okay. Now, what about accumulated depreciation? What's your opening balance?
open balance 80,
How much?
80,
80.
80.
Closing balance?
111.
And what was the, do we know the current year depreciation expense?
Yeah, that we had to find out.
I'm sorry. We get calling, LBW.
So
Huh?
that disposal assets depreciation has to take care.
No, my question has the question telling you the depreciation expense for the current year? No, they are not telling you. But see, here we have two places we don't know information. The debit side and the credit side. Accumulated depreciation credit side is the current year depreciation expense. Debit side of the accumulated depreciation in this context is the amount of depreciation of any assets whose that has been disposed. So we already calculated the depreciation of the asset which we disposed. How much?
9,000.
That is
9.
this we transfer to.
Disposable.
So can we now balance this?
40,000.
If you balance this now, and this 40,000 is the P&L, that is depreciation
2019.
for the year. Clear? Now we have to, I think we have done the disposal account here, right? See, I have taken this. I have taken this. And this also there. And then we found this answer. Now the question they are asking, in the cash flow statement, what are the items relevant from this? From this account, the cash flow statement relevant item is this. See, cash is coming. So that is under investing activity. In the investing activity, you will show purchase
Fixed assets.
of assets. How much?
100,000.
Minus. Right? Under what do you call that? Adjustments for non-cash item. If you see your format, you see all this. I discussed in the last class. Under adjustment for non-cash item, I have depreciation. How much? 40,000. Profit on disposal. Sorry,
Loss on
loss on disposal.
This adjustment for
In the cash flow statement.
non-current
Non-cash items.
non-cash.
Adjustment for non-cash items. If you check our note for the last class, this I have given you there. So how much?
3,000.
And you have to also remember in this, if it's a loss, it's a plus. But if it's a profit, it's a minus. And then proceeds from disposal. How much I received in the sales? When I sell this asset,
3,000.
no,
3,000.
Cash?
8,000.
I received 8,000. See, that's plus. This is a payment, this is a receipt. This is an expense, this is a loss. Loss and expense are same. So that is the answer for this question. Clear?
Yeah.